Fed preview: as crypto market sees smaller rate hikes from December, major banks warn slower doesn't mean lower. While the Fed may slow rate hikes from December, it could keep raising the borrowing cost for longer, according to major investment banks. Risk assets, including cryptocurrencies, have recently found a footing on hopes that the Federal Reserve, Fed, will pivot away from jumbo interest rate hikes from December to end the so-called liquidity tightening sooner than expected and signal the same at its November 2 meeting. However, major investment banks believe that the Fed could keep the doors open for continued jumbo rate hikes, and a potential switch to smaller rate hikes would not necessarily imply an early end of liquidity tightening. The Fed has raised the borrowing cost by 300 basis points, BPS, this year, roiling risk assets. The central bank is expected to deliver its fourth 75 basis points hike on Wednesday, lifting the borrowing cost to the 3.75% to 4% range. It could signal a 50 basis point step down in December. The markets appear to have run ahead of themselves in pricing a slowdown in terms of both frequency and magnitude of rate hikes starting from December. Traders expect the rate hike cycle to peak around 4.8%, down from the terminal rate of 5% priced 2 weeks ago, according to the futures tied to the Fed funds rate. Bitcoin has gained 10% in 2 weeks, while the dollar index has dropped by over 2%. However, inflation remains sticky, suggesting that the Fed has little room to follow. The URL for the full article. For more on this story, visit the news article link.